let's talk about what really changed this morning, and that was the hopeful news on a vaccine. What does that mean to the global economy? What does that mean for U.S. stocks?
Well, it's clearly very significant. You're seeing a reaction in the markets today. The timing for when this all enhances the global economy might be kind of mid next year until you can get dosing and things like that. But markets do tend to move in advance, and this is significant. It's changing not just kind of the view of the markets and the earnings profiles for next year, but it's also changing where you want to be in the markets. You guys have been kind of talking about this all day as the work from home beneficiaries are kind of suffering here at the same time that many of the what I call COVID impaired industries are starting to see significant recovery. So it's not just about market levels, which I think is where too many people are focused, but it's also what's happening underneath that surface, where you're seeing some stocks up 20%, some stocks down 20%.
So walk us through that very point, Tobias. Bob Pisani pointed out that some of the deeper cyclicals have come up a long way, are now selling at very high multiples. So walk us through that maze where you have some stocks that are reacting very positively today, some that have been doing well, not so well. What's the future hold for those groups?
So there are three buckets of value, if you want to think of it that way. There's the financials, which are certainly reacting strongly to the bond yields moving higher. You have a second bucket, which is more the industrial cyclicals, which are already starting to get a bid because things like the ISM were improving. There was a sense of inventory restocking, maybe infrastructure dollars, and now this kind of reopening of the economy, all helping them. And I'll come back to multiples in a second. And then the third bucket is what I call the COVID impaired groups: travel, entertainment, leisure, hospitality, those industries that have been just hammered by the virus. And any kind of solution to the pandemic really revives their chances, and you're seeing stocks react significantly. We found it was very interesting today to watch mall REITs really spiking strongly as all of a sudden people may go shopping again. But let's step back to the valuation point about the industrials that you mentioned, Tyler. I'm an old industrials guy. I used to be an industrials analyst years ago. You always pay up for them when they have depressed earnings. So the valuation criteria that we look at, which valuation metrics have been the most predictive of stock price performance, still says that you want to be in these capital goods, industrial type conglomerates, that there's still opportunity to the upside for performance.
Shepard Smith here. Thanks for watching CNBC on YouTube.